You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets. Welcome back to another episode of The Builder's Mindset. As of so far, I have kind of been winging it, just got to be honest. Just picking the episodes as the weeks come up upon. I'm trying to get a few weeks ahead. And I'm so blessed, I must be so thankful because each week something just presents itself as an opportunity for a great topic to discuss in my 20 or so minutes. And this week did not disappoint. And so Lennar Homes this Friday, Friday the 20th, reported their Q3 earnings. If you're not aware, so Lennar's fiscal year ends November 30th. It's a little off of the majority of the public builders. They don't all end December 31st. I think Horton is actually September 30th. So Horton's about to finish their fiscal 2024 year. But Lennar's off by a month. So what's interesting about that is with their their third quarter ending at the end of August, they had a quick turnaround, which they usually do because they crank their books out pretty fast. They reported third quarter earnings on the 20th. So basically, about 3 weeks after they close their Q3. And it's interesting because Lennar tends to lead the way in the industry with a lot of stuff. They're really big, and they do things that then when they lower prices, a lot of builders in the market kind of have to follow them because they just have so much volume in the markets that they're in. But as far as earnings go, they're going to be about at least a month ahead of all of the other builders. And so we could call this this is the beginning of the kickoff of the Q3 earnings season, which means I better gear up because I am preparing to do another summary of the earnings report. And this time around for Q3 for everyone except Horton is Q4 in their fiscal year. I do intend to do all of the public builders with the caveat that MDC, Richmond American, and Sekisui, I reserve the right to toss them out once again because of the merger, the coming together, whatever we're going to call it, and it may be just too hard to dissect what they're doing, and so I may just kind of punt them until we get to Q1 of 2025 would probably be the best thing. We'll see. I don't want to leave them out, but anyway. So a couple things to note. Episode 1 and 2 have been loaded to YouTube, so if you so choose and you want to see this visually, look at the sunburned face I have for my run today, or look at how fabulous my hairdresser did my hair, aka me in the bathroom with a little bit of water reshaping the do that I have, courtesy of Dan Cuts. I am loading those up. I'll put episode 3, which came out Monday. I'll put that up, episode 3 is coming out Monday. This is episode 4. So I will load that up for all of you, and that way you'll have the option on YouTube, and we'll start including the YouTube links in the LinkedIn notification and the email out. By the way, if you haven't signed up for the email list, please do so. And also, if you're enjoying this, please subscribe and whether it's on Spotify or Apple, wherever. It really helps kind of push it out a little bit more, and hopefully we can get a little bit more of what I call, like I said, it's called the builder's mindset for a reason. I've been in the home building industry for nearly 20 years now, and I've worked for 5 different builders in 3 different markets, and I find this industry amazing beyond just the experiences I've had in it, watching how it operates, watching how it navigates the market, how it navigates interest rate changes, how it navigates trade partner challenges. It's just been such a wonderful couple of decades for me that I want to kind of share what I would consider to be a little bit deeper information for other smaller builders who want to understand the public builders a little bit better, trade partners who want to get a better insight into understanding how builders think, how they operate. And so please subscribe to the email list. subscribe to the podcast and click the like button so we can push it out a little bit more and continue to do these. Really appreciate your support. So without further ado, let's jump into what we'll call the beginning of earnings season. As I said, Lennar tends to lead the way, and this is what's interesting. When their earnings report or the reaction to their earnings report has an impact that may be considered surprising or different or unique, it's interesting then we kind of get a forward look as to what we could think is going to happen as the next ones come out. And we'll talk deeper about that and really my opinion as to like what I think will happen when the other builders start to report. But Lennar had a really positive earnings report. Over 21,000 closings, 16% increase over Q3 of 2023. Their backlog is down a little bit, but they're still on track for around a 10% year over year closings growth, which is what they've talked about a lot. And some other builders have kind of talking about this 10% year over year. And their backlog, like I said, is down a little bit, but it's still almost 17,000 homes in backlog at a valuation of $7.7 billion. And so if you didn't notice, like the market hammered Lennar after the report. And what do I mean by hammered? In my last episode, we talked about the life cycle of the cost that goes into building a house and some of the impacts on that. And I did talk, a little bit about it's the job of the CEO of the company to return value to shareholders. And what does that mean? Ultimately, look, at the end of the day, that means continuing to grow the share price, continuing to grow the market cap of the company, but also the share price. So that's how shareholders get value. You buy a share of any company, public company at X. In a year, you want it to be some amount above X, right? And over time, you want it to grow. And that's investing 101, correct? And so ultimately, that is the CEO's job in a nutshell. They get to navigate the ship and make ultimate decisions on strategy, direction, to ultimately move the stock price in a direction that returns value to the shareholders. And so the market will do what the market will do. And after Lennar's earnings reports, Lennar's stock was down over 5%. Might not sound like a lot, but just put this in perspective for you. I always tell people, be empathetic about everything you hear, everything you experience. How would you feel if your largest shareholdings, if you have a 401k or whatever the case may be, or your bank account even, all of a sudden you looked at it and over the course of a 24-hour period, it was 5% less and you did nothing. You did nothing to it. You didn't withdraw anything. You didn't spend anything, nothing. And it was down. You'd probably be pretty disappointed. And so, for Lennar, this is about a market cap valuation of nearly $3 million. That's below 2.8 or so. Some people might say, yeah, but home builders are doing great. They're doing, awesome. In the 52-week range, Lennar's stock is up over 88%. Along with its contemporaries. Meritage is almost double, up 95% in that same window of time. Taylor Morrison, 93%. But still, go back to what I said. The CEO's job is to return value to shareholders. And, why did this happen and what do we think about it? How do we interpret this? So the market responded negatively in part because of concerns over slowing gross margins. We talked about margins and we talked about the pressure we're going to experience in the last episode. And so this relates to that in the sense of this is how fickle the market can be. Concerns over slowing gross margins, which were still 22.5%. And although it was only a slight decline over previous quarters. And also concerns over price pressure as the average home sales price drops slightly. Oh, okay, so we all talk about affordability, but part of the problem with the market is the slight price drop, okay, in their average sales price. So let me tell you what, When you look at a home builder's average sales price, there are a multitude of factors that can go into impacting this. And I get when you look at it on a national level, we expect that it's a reasonable aggregate. But from quarter to quarter, this could be based on absorption rates, like number of sales in one market versus another. At the division level, it could be number of sales at one community versus another. And there's a multitude of factors that can impact this. The other thing that could happen is just the mix. Maybe they're selling smaller homes on average, okay, because affordability is an issue. What happens when affordability becomes an issue? Buyers start to make those, as we've talked about, those want versus need choices. Hey, I really want a 5-bedroom house, but I need a 4-bedroom. Interest rates are at 7%, prices are rising, inflation is pinching my budget. You know what? But I got to move for whatever reason or another, job change, or I want to get into a different school district because my kids are going from elementary to middle or middle to high school, and so I have to move. I've determined as a buyer I have to move, and I need a 4-bedroom house. Well, in today's market, I might buy that 4-bedroom house, whereas maybe 2 years ago, when interest rates were, where they were then, I might have bought the 5-bedroom. And so a lot of talk about interest rates, and we've talked about that already, so we won't belabor that point. But so just to recap though, the market pounded them over 5%, 2.8 billion in market cap, because concerns over slowing gross margin at 22.5% and pricing pressure as the average home sales price drops slightly. So let's just think about this macroeconomically, right? So if their margins get a little bit of pressure and they're trying to be a little bit more competitive to keep the volume going, and Lennar, typically has a strategy of like selling through cycles like this. They're going to keep pace. A lot of respect for them in that keeping pace, but the market hammers them. And so think about that. So the market, once again, we talked about in the last episode, the system is designed to force these builders to grow their volume, grow their margin, and grow their revenue. And so that growth of revenue means increased home prices. And so it's almost counterproductive in my opinion. Now, how can home builders combat this? There's certain ways they can, and I think Lennar historically has done a great job at this. I think Meritage historically has done a great job at this. And I'll make an analogy to outside of the industry. It's about having a strategy and a plan and being consistent with that strategy and plan. You can overcome some of these things that the market doesn't like: lower margins, lower volume, stalled growth, if it's strategic, it's planned, and it's consistent. Take Amazon for an example. Back in the day, Amazon historically and consistently delivered very low margins, 5-ish%, I believe. But that was their plan. That was their strategy, and they spoke to it. It takes a little time for the market to catch up and be okay with that. And so I think ultimately at the end of the day, if the market does well and performs well enough, companies like Lennar and their contemporaries who are operationally efficient and know how to bring land to market. They do have a land light strategy, but bring that land to market in time to continue to meet the demands of their buyer profile in the markets that they're in. If they choose pace, absorption, maybe occasionally here or there at the expense of a little bit of margin, I think ultimately the market will reward them down the road. It's kind of, in my opinion, what happened for Meritage. Like I said, in the last 52 weeks, Meritage's stock is up over 95%, almost double in the last 52 weeks. Years ago, Meritage made a strategy shift, and they used to, in a lot of the markets, build, move up, second move up. Somebody would even consider luxury homes, and they made a strategy shift, and they were very vocal about it. And I think this is important when you listen to the earnings calls. And I've told all of you, I know I will do a summary for you every quarter from here going forward that will be operationally focused, operationally minded. But I highly, highly encourage everyone who's listening to pick at least one, if not two, earnings calls and listen to them live. I find them extremely entertaining. You learn a lot listening to the executive team of these companies speak about the results and why the results were what they were. And then listening to the analysts ask questions is also really interesting, enjoyable, sometimes quite entertaining. So highly recommend it. But Meritage they've been talking at length for many years about their strategy shift to entry level and move up. And they've been talking about it, telling the market what they're going to do, and then delivering on that. They focused on like percent of sales that were entry level, percent of sales that met their strategy, and then they went to the spec strategy, spec only, and they talked about that. Were consistent with that and gave measurements on that. And now, they're going into this 60-day 60-day guarantee to close, which is another level of shift in their strategy. But if you listen to their last earnings call, they talked about it. And so you can get over these things. And so this is what I say to people, like, well, I say, listen to a couple of earnings calls and listen to them every quarter. They're an hour, maybe an hour and 5 or hour and 10 minutes. They're very enlightening. You get to hear the strategy that the leadership teams at these companies are planning out. And then you can go, if you're, let's say, a trade partner in a given market or multiple markets, you can actually see how they execute that on the ground. And it's really interesting to watch it happen and follow it over a couple of years, over 5 years, and see what they do and see how the market reacts to that. So back to the consistency. So if you have a strategy and you pick it and stick it, it's kind of like I talk about how to run downhill. As a trail runner, I watch a lot of people. It's very easy, in my opinion, to get better at running uphill, because a lot of it just has to do with strength, endurance, and performance. And so you train more, you train more, you train more. You run more hills, you run more hills, you run more hills. And it's really hard to fall down and hurt yourself in a big way running uphill. Not to say you can't fall down, but you can. But I see a lot of runners, trail runners, that I think they're amazing uphill, but they're very timid downhill. They struggle. I watch them with their footing. It's not very sure. You could tell they're second guessing themselves. When you ask them, they talk about things like nervousness, fear, lack of confidence. I see this in a lot of builders too. And so for when I give advice to people on becoming a better downhill runner, I tell them it's all mindset. It's all about getting confident, and I give them tips and tools of how to be confident. And one of the things I tell them is pick an easy downhill, like something that's not very hard, but flat. When I mean flat, it's downhill, but there's not a lot of like obstacles. And I say, and then just start picking your footsteps, where you're going to step your next 3 or 4 steps, and stick to that. Pick it and stick it. And you will get confident in your ability to pick a spot, put your foot in that spot, and then you can either go a little faster, and then you can go to something a little steeper, and then you can go to something a little bit more technical, and you just slowly get better at pick it and stick it. And this is what a lot of builders do and can do, and some are good at it and some aren't, in my opinion. Some have all these strategies, and we'll talk about strategies, why some stick and why some don't. But this idea that the builders that are going to be successful as it relates to the market are the ones that pick a strategy and stick to it until it becomes the norm and they win at it. Now, do you always win at it? No, and you have to know when to pull out of it. But what I see with a lot of builders is they'll pick a strategy and one of two things happens. Either they don't really stick with it ever, like different divisions or different departments kind of haphazardly pick whether or not they're going to do it, what part of it they're going to do it, and they just don't really buy into it. When you're running downhill, if you're not sure about your footing and you start to change or you're not fully committed, you don't really stick it, that's when you trip. And when you trip and fall downhill, let me tell you what, it's messy. It is really messy. Falling going uphill, not a big deal. Falling going downhill, huge deal. So when these builders pick these strategies, but they don't stick with it, they don't get the buy-in from their team, they stumble, they fall, and the market responds to them. And so it's interesting that we'll see how this pans out for Lennar. I think Lennar's been pretty consistent with their strategy for quite some time. They refer to the machine. The only big change I think they're really doing right now is the land light strategy, which I don't delve too much into that in this show. I focus more on operationally. Lennar is just continuing to try to execute better, trying to reduce their cycle times, trying to get their costs down, and trying to keep their pricing in line, maybe even lowering their price, as they mentioned, to try to continue to sell the number of homes they need to sell to meet their business plan. As we said, they're on track for 10% year-over-year growth right now. As we go into kind of what you would argue is probably the softer season of the year. Not as many sales, not as many closings typically in this time of year because everybody's sort of settled down, at least those with kids and families. And so, but I think the market will give this back to them. I think that Lennar will be this 5%, 5 point, whatever it was, I think it was 5 point, it was over 5%. I think Lennar will get that all back before the first, and then some, before the first earnings report from the fiscal year December 31st builders start to report their earnings. And so it'll be interesting to see how some of this, what has happened here and what's reported here, comes out to play. Sometimes the next those whose quarters end next Monday, the 30th of September, and we'll begin reporting late in October, probably the third week of October. We'll start to see some of those reports come out. It'll be interesting to see if any of them sort of adjust their language, semantics, and terminology as they speak to the analysts on their calls. And it'll be interesting to see how the market responds to them. So, things to look out for in the earnings calls that come up. The big round that come up in October is, I think a lot will tell who's first, and I'm not sure out of the gate right now who is first. But if whoever's out of the gate first has a little bit of a dip in margin, I think the analysts are going to pounce on that. If they're a little bit better in margin, which is highly possible, I think that'll kind of confuse the analysts on the market a little bit, because I think they're not sure what to make of it right now. Talk about interest rates. Dare I say, like, everybody's excited about the interest rates, but me not so much, as we talked about. I thought it should have been a quarter, if anything, and I really thought they should have waited until after the election cycle to make a change. But it is what it is. But listen, Lennar, one last thing on that I want to point it out. They had, one of the bright spots is they had extremely low SG&A. 6.7%, I think, is what they reported. So operationally, efficiently wise, they are just, in my opinion, doing everything they should do to perform the best that they possibly can. And the market rewarded them. There was little air quotes for those of you watching on the YouTube channel. They were rewarded with a 5% hit to their stock price within 24 hours. And, I don't think it was deserved. I think the home building industry is strong. I think the market looks strong. I think demand is inherent. There's inherent demand in the market right now. We have a housing shortage. We all know this. The difficulty is going to be, number one, getting the regulators out of the way in most municipalities, particularly more difficult ones like here in California, so that builders can build. We don't have a home building problem. We don't have an issue with, the supply. We have an issue with regulations in terms of like the government getting in the way and causing a lot of unnecessary red tape and unnecessary cost to do that. But even with that, I've said this before, is I think the system can only build about 1.4, 1.5 million homes per year. And I think that get everything out of the way and we're going to struggle from a trade perspective, mostly labor at this point in time, to meet that demand. And I think there's a lot of talk about AI and robots and whatnot, but it's not there yet. And I could do a whole podcast on the cost of modular housing and factory built housing. At the end of the day, that's somebody else's problem right now to solve. It will eventually create some alleviation in the supply and labor problem, but we really need like more people to go into the trades, and it needs to be less of a stigma. And there's some folks championing that, and I think they need to continue to champion it because it's a great industry, it's a great job. But we right now can't build enough homes, and anything offsite, anything modular today is only going to like make the affordability issue worse, because nothing compares. And we can preach till we're blue in the face about why this doesn't make sense, but it is what it is right now. Site-built housing in the United States is the most cost-effective way today. Not saying it's just a fact. If you just look at the numbers, and I've looked at it a bunch of different ways. I've looked at panels, I've looked at modular housing, you name it, it's all more expensive. And so we need to figure that out. But until we figure that out, we're in a situation where we can build about 1.4, 1.5 million houses a year, and that's not enough. And we know that's not enough. We know there's a shortage. You pick any survey, any data metric, and we will tell you that we're undersupplied and that it's not enough. So you put the regulations in front of us, and then you put that shortage that we tell kids they shouldn't be in trades, they should go to college, and come out with a six-figure, debt to go to college instead of going to be a trade right out of school and start out making $50,000, $60,000 a year, and in 5 years could potentially make it six figures and maybe even start their own business. But that's a podcast for another day. We'll get to that. But anyway, welcome to earnings season. It is now here and upon us. Next week, we're going to talk about mindset, as we've got a few weeks before the real earnings onslaught hits us. I'm optimistic. We said I'm bullish about home building, and my mindset is positive about it. I believe it's going to continue to be strong, and looking forward to all of the other builders doing their earnings reports between now and then. We'll have a couple other episodes before we start reporting on that. Like I said, next week we'll do mindset in the home building industry and how mindset impacts how we perform, how we operate, and how we go about doing our business. Thank you again. I really enjoy doing these, and it was wonderful to be at the Biz Show last week and network and talk with folks. And I really appreciate the folks who came up to me and thanked me for putting the show out. Thanked me for and how much they enjoyed it, how well produced it was. Really means a lot. It's amazing what AI can do to help you produce a podcast these days. It's been a huge help, and I really appreciate everyone who's showing up to listen. So with that, I'll let you go, and we'll see you next time.
Thanks for listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets. Remember, your mindset matters. Thanks for listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets. Remember, your mindset matters.